Jai Hind everyone. Welcome to my YouTube channel, which is Explore Yourselves, Banking and General Knowledge, etc. Today I will discuss about DFS PLI scheme for senior executives of public sector banks, fiscal 4 and above, including directors. Today I will be discussing the Performance Linked Incentive PLI scheme introduced by the Department of Financial Services for senior executives of public sector banks, covering skill 4 and above, including whole-time directors. This scheme, launched in 19 November 2024, marks a significant step towards linking compensations with the performance, ensuring greater accountability, transparency, and efficiency in the banking sector. It aims to motivate senior officers by rewarding both individual performances and overall bank performance, thereby aligning personal goals with organizational growth. In this presentation, we will understand the eligibility criteria for banks and officers, the method of calculating PLI, the performance evaluation framework, and the key parameters such as efficiency, business growth, asset quality, and financial inclusion that determine the final incentive payout. payout. Let us now explore the scheme in detail. The Department of Financial Services had launched a new performance-linked incentive scheme (PLI) scheme for senior executives and sole-time directors of public sector banks on 19 November 2024. Now we will understand this new PLI scheme. Eligibility for public sector banks to pay performance-linked incentive (PLI) to senior executives. Amount of PLI to be paid by banks to senior executives, skill 4 and above, till whole-time directors, as per DFS Circular 2024. How much PLI will be actually paid to senior executives of banks? Eligibility of senior officers and executives of banks to get PLI. How performance of bank will be calculated as per DFS Letter 2024. How banks will be provided marks for payment of PLI. Efficiency 25%, business 25%, asset quality 25%, financial inclusion is 25%. Eligibility for public sector banks to pay performance linked incentive PLIs to senior executives. The PLI shall normally be paid in a single tranche in cash. For any bank to be eligible to operate the PLI scheme, at least 3 out of the following 4 criteria have to be met. ROA positive, net NPA at not more than 1.5%, or in case if net NPA is more than 1.5%, then reduction of 25 BPS or more in opening net NPA of the financial year. Cost to income ratio at not more than 50%, or in case if the CIR is more than 50%, then at least AROER improvement in CIR. CRAR at minimum regulatory requirement plus 200 BPS or more. Amount of PLI to be paid by banks to senior executives, skill 4 and above, till whole-time directors as per DFS Circular 2024. All permanent employees, including lateral hires and officers on deputations in skill 4 and above, shall be eligible for PLI. The amount of PLI that will be paid to senior bank executives is as follows. EDs and MDs of nationalized banks and DMDs, MDs and chairman of SBI, 100% of annual basic pay. Skill 7 and Skill 8, 90% of annual basic pay. Skill 5 and Skill 6, 80% of annual basic pay. Skill 4, 70% of annual basic pay. This means if annual basic pay of MD is rupees 20 lakhs, then he may get the PLI of up to rupees 20 lakhs. This means he can get double salary. But there is a catch. All officers may not get the same PLI. Maximum permissible PLI will be calculated as per bank's overall performance score, individual's performance, and the maximum permissible ceiling in the scale of the executive. How much PLI will be actually paid to senior executives of banks? Bank score 80 per more than 80%, 100%. Bank scores 60%, equal to 60%, and greater than and less than 80% is 80% WTVMD. Greater than and equal to 40% to less than 60% is 60%. Less than 40% is 0%. PLI for skill 4 to skill 7. Chart is If you have a detailed look at the table above, you will understand that PLI will not be paid equally to all senior executives. Let's start with Scale 4. Scale 4 has been allowed PLI up to 70% of annual basic pay, but this will be paid to top 20% Scale 4 officers only. The bank score is more than 80%. This bank score is calculated via various parameters and it's very difficult for banks to get more than 80% score. Normally all banks fall between 40% to 60% criteria. This also means that the performance of Scale 4 officers will be evaluated on individual basis. Public sector banks have launched a portal for assessment of performance of employees such as SBI has grading system and PNB has PAF score. This performance is evaluated as per the targets achieved and various other parameters. Suppose a bank has 1000 Scale 4 officers, the score of bank is more than 80%, then top 20% will get 100% PLI. That is 70% of their annual basic pay. Let's get more realistic and choose the bracket of 60% to 80% as it's very difficult to achieve more than 80% bracket. So around 200 Scale 4 officers will get 80% of the PLI. That is 80% of 70% of their annual basic pay. Other 200 Scale 4 officers will get 70% of the PLI. That is 70% of 70% of annual basic pay. Another 200 Scale 4 officers will get 50% of the PLI. That is 50% of 70% of the annual basic pay. Other 200 Scale 4 officers will get 30% of PLI. That is 30% of 70% of annual basic pay. And the remaining 200 Scale 4 officers will get nothing. Total Scale 4 officers, suppose 1000. Annual basic pay of Scale 4 officers, starting basic pay Scale 4 is 1 lakh 2300. Taking average of all Scale 4 is rupees 1 lakh 10,000. So annual basic pay is rupees 13 lakh 20,000. So if bank score is 60 to 80%, so top 20 will get 7 lakh, around 7 lakh. Next other 20% will get around 6 lakh 46,000. Other 20% will get around rupees 4 lakh 62,000. And other 20% will get around rupees 2 lakh 77,000. Remaining 20% will get nothing. Officers who receive PLI will also have to pay income tax on PLI. The bank score is 40% to 60%. Then top 20 will get around rupees 5.5 lakh 54,000. Other 20, next 20 there is 4 lakh 62,000. Next 20% will get rupees 3.69 lakhs. Remaining 20, other 20, next 20 will get rupees around 1 lakh 84,000 and remaining 20 will get nothing. If bank score is less than 40, then nobody will get anything. Like this, the PLI can be calculated for all senior executives. This new PLI scheme for senior executives of banks by DFS is based entirely on individual performance of officers. Banks board shall frame a transparent and non-discriminatory policy for identifications of officers in different brackets top 20, 20 to 40, 40 to 60 and 60 to 80 in each scale. At the beginning of the period for which performance has to be assessed, the employees in each of the eligible hierarchical scales, scale 4 to scale 8, shall be separated into two distinct pools, which non-revenue generating functions and revenue generating functions. Banks shall ensure that of the employees eligible for PLI, at least 50% of them are from revenue generating functions. Cost threshold for PLI, maximum admissible PLI, shall be calculated in line with the Department of Public Enterprises guidelines for performance-related pay in public sector enterprises. 60% of total PLI to be given from 3% of profit before tax of previous year and remaining 35% of PLI to be given from 10% of incremental PBT of the previous year over the year before, with overall payout ceiling of 5% of PBT of the previous year. In case of any reduction in the cost threshold for PLI, there will be a proportionate reduction in the corresponding PLI payment of all eligible officers fiscal 4 to WTDs. Any discrepancy impacting profitability that may figure in RBI audit shall be netted and adjusted in the next year's PLI ceiling amount of 5% of PBT. The government will approve PLI for full-time directors and Board of Bank will approve PLI for officers in Scale 4 to Scale 8. Eligibility of senior executive officers and executives of banks to get PLI. An employee must have served for minimum age 6 months in at least one of the eligible scales. 4 to 8 and shall be paid pro rata for the period served in the eligible scale. In case an employee has served in more than one eligible scale, 4 to 8, during the performance period, the employee shall be eligible for pro rata payout for the period of performance under the respective scale. Executives elevated to the position of WT shall be eligible for PLI of their respective previous scale position, irrespective of the number of months served during the year on pro rata basis. Employees punished with dismissal, removal, termination from service shall not be eligible for PLI. Employees punished with major penalty will not eligible for the trigger period. In the cases of resignations or terminations, the amount of award not paid out will stand forfeited and lapsed. How performances of bank will be calculated as per DFS Letter 2024. Bank performance shall be evaluated based on an evaluation matrix comprising of four equally weighted evaluation parameters: efficiency 25%, business 25%, asset quality 25%, and financial inclusion each reforms 25%. This means that a bank will be provided marks on the basis of these four parameters. If efficiency is 15%, business is 10%, asset quality is 10%, financial inclusion is 10%, then total marks of bank will be 45%. Senior executives and whole-time directors of bank will be paid PLI as per 40% to 60% bracket. The first three parameters are further divided into 12 sub-parameters, such as operating profit to total assets, return on risk-weighted assets, net interest margin, cost-to-income ratio, current account and savings account deposit growth, RAM advances growth, standard advances growth, net NPA to net worth, total SMA to standard advances, recovery and upgradation ratio, and slippage ratio, thereby capturing important financial indicators. The performance evaluations on these sub-parameters shall be made using four different evaluation methodologies defined as under. M1 means scoring is based on how much a bank improves compared to last year. If a bank performs better than last year, it gets a higher mark. But banks that were already performing well earlier may find it harder to improve further. So to make it fair, performance is divided into different levels, slabs, and marks are given accordingly. M2 means the bank's performance is compared with other scheduled commercial banks. Yes, if a bank performs better than the average growth of the other banks, it gets higher marks. So marks depend on how well the bank performs compared to others. M3 means the bank's performance compared with other public sector banks. If a bank performs better than the other PSU banks, it gets higher marks. This helps measure performance within similar types of banks. M4 means marks are given based on whether the bank meets its targets. If the bank achieves its targets, it gets good marks. If it fails to meet targets, marks will be lower. So M1 is improvement from last year, M2 is compared with all banks, M3 is compared with PSU banks, M4 is based on target achievement. The committee headed by the secretary, DFS shall periodically review and update the evaluation metrics, evaluation parameters, and evaluation methodology as per evolving requirements. Priority thrust areas of the government, focused priority sector, government sponsored schemes in the banking sector, etc. The committee headed by the Secretary DFS shall comprise the Additional Secretary DFS, Joint Secretary Banking, and Chief Executive of IBA as its members. How banks will be provided marks for payment of PLI. The banks will be provided marks as per the parameters below. The marks of each parameter is also given below. Efficiency 25%, operating profit 6.2% to 5% weightage, return on risk weighted 6.25, net interest margin 6.25%, cost to income ratio 6.25%. This means this means that bank will get 25 marks under this parameter only if ranks well in operating profit, RWA ratio, NIM, and cost to income ratio. If operating profit is less than or equal to 1%, then increase in BPS will be 30 to achieve maximum marks. If operating profit is more than 1% and up to 1.5%, then increase in BPS will be 20. If operating profit is more than 1.5% and up to 2%, then increase in BPS will be 10. If operating profit is more than 2%, then it should be maintained above 2% to achieve maximum marks. If RORWA is less than or equal to 0.25%, then increase in BPS should be 15 to achieve maximum marks. If RORWA is more than 0.25% and up to 0.75%, then increase in BPS should be 10. If RORWA is more than 0.75% and up to 1.25%, then increase in BPS should be 5. If RORW is more than 1.25%, then it should be maintained above 1.25% to achieve maximum marks. If NIM is less than or equal to 2.50, then increase in BPS should be 30 to achieve maximum marks. If NIM is more than 2.50 and up to 2.75, then increase in BPS should be 20. If NIM is more than 2.75 and up to 3, then increase in BPS should be 10. If in NIM is more than 3, then it should be maintained above 3% to achieve maximum marks. If cost to income ratio is less than or equal to 40%, then it should be maintained below 40% to achieve maximum marks. If cost to income ratio is more than 40% and up to 45%, then reduction in BPS should be 25 to achieve maximum marks. If cost to income ratio is more than 45% and up to 50%, then reduction in BPS should be 50%. If cost to income ratio is more than 50%, then reduction in BPS should be 75. Business 25%. CASA deposit ratio 6.25. Growth of total deposits 6.25. Growth of RAM advances 6.25. Growth of substandard advances 6.25. The most important point is that the performance of bank will be compared with all banks in India, including private sector banks. If the total growth in deposits is less than 75% of all scheduled commercial banks, then the bank will get 0 marks in this parameter. 100% marks will be given only if the growth in total deposits is more than or equal to 100% of all scheduled commercial banks. If CASA ratio is less than 40%, then increase in BPS should be 650 to achieve maximum marks. If CASA ratio is 40%, then more or up to 50-45%, then increase in BPS should be 25. If CASA ratio is 45% or more and up to 50%, then increase in BPS should be 10. If CASA ratio is 50% or more, then it should be maintained above 50% to achieve maximum marks. If growth of total deposit is less than 75% of our scheduled commercial banks, then marks will be 0. If growth is 75% or more but less than 90% of all scheduled commercial banks, then marks will be 50%. If growth is 90% or more but less than 100% of all scheduled commercial banks, then marks will be 25%. If growth is 100% or more of all scheduled commercial banks, then marks will be 100%. If growth of RAM advances is less than 75% of all scheduled commercial banks, then marks will be 0. If growth is 75% or more but less than 100% of all scheduled commercial banks, then marks will be 50%. If growth is 90% or more but less than 100% of all scheduled commercial banks, then marks will be 75%. If growth is 100% or more or all scheduled commercial banks, then marks will be 100%. If growth of standard advances is less than 75% of all scheduled commercial banks, then marks will be 0. If growth is 75% or more but less than 90% of all scheduled commercial banks, then marks will be 50%. If growth is 90% or more but less than 100% of all scheduled commercial banks, then marks will be 75%. If growth is 100% or more of all scheduled commercial banks, then marks will be 100%. Asset quality 25%. Net NPA to net worth 6.25. Total SMA to standard 6.25. Recovery and upgradation 6.25. Slippage 6.25. If net NPA to net worth is less than 25%, then marks will be 25. If, if it is 25% or more but less than 50%, then marks will be 250. If it is 50% or more but less than 75%, then marks will be 500. If it is 75% or more, then marks will be 750. If total SMA to standard advances is less than 75% of all public sector banks, then marks will be 100%. If it is 75% or more but less than 90% of all public sector banks, then marks will be 75%. If it is 90% or more but less than 100% of all public sector banks, then marks will be 50%. If it is 100% or more but less than 125% of all public sector banks, then marks will be 25%. If it is 125% or more of all public sector banks, then marks will be 0%. If recovery and upgradation ratio is less than 75% of all public sector banks, then marks will be 0%. If it is 75% or more but less than 90% of all PSBs, then marks will be 25%. If it is 90% or more but less than 100% of all PSBs, then marks will be 50%. If it is 100% or more but less than 110% of all PSBs, then marks will be 75%. If it is 110% or more of all PSBs, then marks will be 100%. If slippage ratio is less than 75% of all public sector banks, then marks will be 100%. If it is 75% or more but less than 90% of all PSBs, then marks will be 75%. If it is 90% or more but less than 100% of all PSBs, then marks will be 50%. If it is 100% or more but less than 110% of all PSBs, then marks will be 25%. If it is 125% or more of all PSBs, then marks will be 0%. Financial inclusion 25%. Following targets are included in financial inclusion. Banks will get marks as per the targets achieved. PMSB Nidhi, Stand Up India, PM Surya Ghar Bijli Yojana, PMMY, PM Vishwakarma, Parivar Mudra Scheme, Education Loans, PMAY, PM Suraksha Bima Yojana, Agri Infra Fund, Kisan Credit Card, PM Jeevan Jyoti Bima Yojana, each PSB reforms agenda. In conclusion, the performance-linked incentive PLI scheme introduced by the Department of Financial Services represents a transformative approach in the functioning of public sector banks. By directly linking incentives to both bank performance and individual contributions, the scheme promotes a culture of accountability, meritocracy, and result-oriented performance. The structured evaluation framework based on efficiency, business growth, asset quality, and financial inclusion ensures a balanced and comprehensive assessment of performance. At the same time, the differentiated payout mechanism highlights that rewards are not uniform but are earned through measurable achievements. However, the scheme also brings challenges as achieving higher performance brackets requires consistent improvement and strong alignment with organizational goals. Therefore, it calls for enhanced focus, strategic executions, and continuous performance monitoring at all levels. Overall, the PLI scheme is a progressive step towards strengthening the banking sector by encouraging excellence, improving productivity, and supporting sustainable growth. Disclaimer: this presentation is prepared for informational and educational purposes only. The contents are based on publicly available information and internal understanding of the DFS PLI Scheme 2024 for public sector banks. While every effort has been made to ensure accuracy, the information presented may be subject to change, clarifications, or revision as per future guidelines, circulars, or instructions issued by the Department of Financial Services, Government of India, or respective banks. This presentation does not constitute any official communications, policy document, or financial advice and should not be relied upon for decision-making purposes. Viewers are advised to refer to official circulars and notifications for authentic and updated information. The presenter shall not be held responsible for any errors, omissions, or consequences arising from the use of this information. Thank you very much for your patience. Request for like, share, and subscribe.